All right, let's talk about those financial charts. You know the ones. They look like a crazy, chaotic mess, right? Well, today we're going to demystify all of that. I'm going to show you how to see it all as a simple, classic game of tug of war.
So, have you ever looked at a price chart and just thought, what is going on here? It just looks like a totally random, unpredictable scribble. If so, you are definitely not alone. But what if I told you there's actually a really clear and simple logic behind every single one of those zigzags? The secret isn't some super complex mathematical formula, not at all. It's actually much, much simpler. It's all just a classic game of tug of war. And trust me, once you start seeing the market this way, everything else just kind of clicks into place.
Okay, so like any good game of tug of war, you've got to have two teams, right? Two opposing sides pulling on that rope. And in the world of financial markets, we call them the bulls and the bears.
All right, let's meet the teams. On one side of the rope, you've got the bulls. Think of them as the buyers. Their goal is super simple. They want the price to go up. And they do this by creating what we call buying pressure. Now on the other side, you have the bears. These are the sellers. And their goal, you guessed it, the exact opposite. They want to see the price go down, and they do that by creating selling pressure.
So you're probably wondering, okay, where does the actual price fit into all this? Well, think of the market price as that little flag or ribbon tied right to the center of the rope. Its movement, that's just showing us which team is pulling harder at any given moment.
All right, so let's get into the nitty-gritty. How does this rope, the price, actually move? It's not random, not one bit. It's the direct result of this constant ongoing battle of pressure between our two teams. And the key concept here, the really important thing to grasp, is relative strength. See, the price doesn't move just because there are buyers or just because there are sellers. Nope, it only moves when one team's pressure overpowers the others, even if it's just for a split second.
And really, the cause and effect here is super simple. When the buying pressure from the bulls is stronger than the selling pressure from the bears, what happens? The price goes up. And when the selling pressure from the bears is stronger, the price falls. But what if they're both pulling with pretty much equal force? Well, then the price just kind of stalls out, barely moving at all.
Okay, so we've got our teams, the bulls and the bears. We understand the battle of pressure. But how do we actually keep score? How can we look at a chart and tell who won each round of this fight? Well, that is where the candlestick chart comes in.
I want you to think of each candlestick as its own little story, like a snapshot of the battle that took place over a specific period of time. It doesn't matter if it's a 1-minute candle, a 1-hour candle, or a 1-day candle. Each one tells you exactly who was winning the tug of war during that specific round.
And every single one of these little stories follows the same simple 3-act plot. Act 1, the open. This is where the round begins, at a starting price. Act 2, the battle. This is where the price gets pushed around to a high point and a low point. And finally, Act 3, the close. This is where the round ends at its final price.
So the open, it's exactly what it sounds like. It's the starting line. It's the exact price where the center of our tug of war rope was when the whistle blew to start that round of the fight.
Then you have the high and the lows. These show us the peak effort from each team during the battle. The high, that's the absolute furthest the bulls managed to pull that rope in their favor. And the low, well, that's the furthest the bears were able to drag it in their direction before the other side started pulling back. And finally, we have the close. When the clock runs out for that round, let's say the minute is up, the close is the final resting price of the rope. It tells us exactly where the battle ended for that period.
Okay, so now that we know how a candle is actually built, let's talk about how to read its story. Because just by looking at its shape and its color, you can instantly tell who was in control of that round.
The first and most basic thing is just figuring out who won. It's simple. If the final price, the close, is above the starting price, the open, it means the bulls won that round. We call that a bullish candle. On the flip side, if the close ends up below the open, the bears won, and that's a bearish candle.
But the story gets even more detailed than that. Look at the size of the candle's body, the thick colored part. This tells you about the strength of the victory. A really big, long body, that means it was a decisive win, a total blowout by one side. But a small, stubby body, that signals indecision, or a really, really close fight.
And what about those thin little lines sticking out from the top and bottom? Those are called wicks, and they tell you all about the struggle that happened during the round. They show you where the price went, but where it couldn't manage to stay. So a long upper wick,
That means the bulls pushed the price way up, but the bears fought back hard and pushed it back down before the round ended. And a long lower wick tells the opposite story. The bears tried to drag the price down, but the bulls said no way and pushed it right back up, showing the buyers were stepping in.
So let's put it all together one more time. It's this simple. The teams are the bulls and the bears. The center of the rope is the current price. The force they're pulling with, that's buying and selling pressure. The movement of the rope is the price movement. And the scoreboard that tells you who won each round, that's the candlestick. So the next time you pull up one of those charts, I want you to remember this. You are not looking at random noise. What you're really seeing is the visible result of a continuous contest, a non-stop tug-of-war between buyers and sellers. And once you learn how to read that scoreboard, the whole game starts to make perfect sense.